Good morning, everybody. It's Monday. It's early. I am finishing up MMT Trader, and that will be out later today. But I really had to make this video because I have to talk about what's going on with the market. And again, I have to give some explanation and some perspective here. Okay, so market was down 400 points on Friday, down another 100, 120 this morning. So the cockroaches are having a party. They are out big time, big time, big time on this huge sell off. They are feasting on this sell off. Okay, we all see this. Now, and this is being driven by fears that the Fed might raise rates by 25 basis points at the next meeting. So I'm not even going to talk about the magnitude of the rise or where interest rates are right now, historically very, very low. I don't care about that. Suppose I told you that the Fed was about to announce that it was going to send out money to people, that the Fed just decided it was going to write checks to people. Maybe not everybody, but it was going to start sending out checks. I guarantee you that if the Fed made that statement that it was going to start sending out money to people, investors would go wild. They would buy the stock market. They would sell the dollar off. They would buy gold because what is that? That's helicopter money right there. That's helicopter money. Remember, we heard about all these talks about helicopter money from the very serious people where the Fed could just drop money into the economy. Well, hate to tell you, but that's exactly what a rate increase does. That's exactly what a rate increase is. When the Fed says it is going to raise rates, it forces itself to pay money to people. Remember, the Fed pays interest on reserves. So when it raises rates, it literally writes checks to people. This is helicopter money in action. But rather than going wild as they said they would do if there was helicopter money by selling the dollar and buying stocks and buying gold, they're doing the exact opposite. So all of these geniuses, all these very smart people, they don't even see, they don't even understand when helicopter money is happening for real. They don't even know it. They don't even see it. When the Fed raises rates, they have to pay. The Fed has to pay, has to send out money to people. Now you might say, well, Mike, that's not checks to everybody. Hey, you're right. It's sent out unequally. You mean just like, kind of like when the Fed cuts interest rates? So, yeah, that helps borrowers, but guess what? To people who are savers or creditors, the Fed is taking away their money, taking away part of their income. So, yeah, that's not shared equally either. So, all this does is just redistribute the money in the economy, but it also is a net addition because that's money that came from nowhere. That's just being paid now. Whereas the rate cutting, that's literally money taken away. So you got people now going crazy, selling stocks like crazy, panicking, down 600 in 2 days on the Dow. Chopping off a huge amount of market capitalization because the Fed is doing helicopter money. This is literally writing checks to people. This is literally writing checks to people. Now, somebody might say, well, yeah, but, the cost of borrowing is going to go up. The cost of borrowing is a form of inflation, okay? And we know what happens with inflation. When people think that the price is going to continue to rise, what do? They buy now, because we know in the future it's going to be more expensive. So borrow now because we know in the future it's going to be more expensive, right? Rate increases are a form of inflation. Hey, gold, doesn't that rise with inflation? Yeah, it does, and it will. So, interestingly enough, what did we see last week? We saw the biggest increase in commercial loans in 4 years. Total loans and leases jumped by 54 billion in 1 week. Now, I talk a lot about fiscal flows here driving everything, but bank credit can drive things too, at least for a while. We know bank credit is not a net addition of money because it's, yeah, you get money in your checking account, but you also get a liability, which is the loan itself that you have to pay off with interest. All right? But it can support the economy for a decent amount of time. And if you look now at the very, very low level of household debt burden, in other words, debt service payments as a percentage of disposable income at a 40-year low, households could take on a lot more debt. So, you cockroaches, have fun at your party, sell. This is helicopter money, baby. You don't even see it. Helicopter money. I am not afeared. I am not afraid, all right? I'm buying. We'll see who's right. See you later. Bye.